Now, even though it seems like a no-brainer to use ETFs like MSTY or lots of the other yield max ETFs, for example, to do something like replace your income or allow you to earn enough income consistently to pay for some of all of your bills, etc. Because a lot of these different yield max ETFs, for example, track underlying names, like MSTY, for example, tracks MSTR, a highly volatile single stock. The amount of distributable income is going to be sort of all over the place, not to mention this ETF in general is just going to be pretty volatile. Now, for example, the last few months, $2.02, $2 and almost 30 cents, then a few months before that, over $4 per share per month. Now, I'm not saying that MSTY is a bad investment, but for this video specifically, I'm going to be going through 7 different ETFs that I think might be a little bit more stable and a little bit more predictable to replace your entire income, maybe even and then some. Now, I say all that to say that using names like MSTY or these other little bit more volatile ones as sort of ancillary satellite positions in your portfolio, in my personal opinion, is awesome. But like I said in this video, we're going to be going over some more stable names with a long track record of paying and growing over time. So if you want to see 7 ETFs that could easily replace your income, make sure to stick around, drop a like down below, and let's get into the first one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, when it comes to an ETF that I personally think is awesome to replace your income, and I say that because this ETF specifically has been paying me a boatload of income every single month for ages now, is the JP Morgan Nasdaq Equity Premium Income ETF JEPQ, one of the best equity premium income ETFs across the entire market, if you ask me. Now, I say this because JEPQ is low cost to hold on to. Its 0.35% expense ratio is pretty cheap considering what it offers. But also because JEPQ offers Nasdaq 100 exposure, which for the most part only goes up and to the right, at least during the time frame that I've been holding onto it. But with JEPQ's option overlay, this ETF is going to offer even less volatility than the Nasdaq on its own. Now, over time, JEPQ's dividends have been somewhat sporadic, sometimes 55 plus cents, sometimes as low as 38 cents, just based off the last 12 or so months. But still, you sort of have an idea more or less of what you're going to receive within a range. And this is simply just because we have somewhat of a long track record, because JEPQ has been trading for quite some time. Now, again, certain assets are going to be better to possibly live off of the income. Certain assets you're probably going to want to use some of that income to reinvest into more shares, etc. But JEPQ is currently in my portfolio, and this ETF specifically is going to be a massive help for me personally when I do choose to live off my dividends. Another ETF that I think is going to be perfect when it comes to living off of dividend income is going to be the SPYT ETF, the NEOS S&P 500 High Income ETF. And this is because this ETF once again pays monthly, just like JEPQ, and it offers a 12% distribution rate. But even maybe more important than that, for the context of this video, finding an ETF to pay your expenses, this ETF pays more or less the same exact amount every single month. Now again, if an ETF pays something one month and maybe way more or way less the next month, but if it equals out to a nice solid yield, I don't personally see anything wrong with that. But again, if you're trying to build out a portfolio that you're going to be using for your expenses and that you want it to be somewhat consistent, well then something like SPYI that pays around 50 cents more or less per share per month is going to be helpful. Now, on top of that, over time, SPYI is not NAV decayed. It's actually grown slightly, so it's not only been paying around 50 cents per share per month, but it's also grown along the time that I've been holding onto it. Now, all that to say that if you want to utilize an ETF that's going to potentially pay your expenses, an ETF like this one might be worth looking into. Another ETF that I think will do the same exact thing is QQQY, another ETF that I've personally been stacking a ton of shares of over the last year or so, and an ETF that I'm definitely going to be utilizing to pay my expenses later on. Another NEOS ETF with the same exact strategy more or less of SPYI. This ETF though, because there's a little bit more volatility, offers almost 60 cents per share per month. So what's great about the ETFs that I've talked about so far is you're not necessarily sacrificing all growth potential to get some massive income, which sort of seems like the both the best worlds, especially if you're an investor that wants to build a portfolio to pay for your bills later on. Now, another ETF that is perfect to look into if you're trying to build out an income producing portfolio that's going to help you pay for your bills, etc. This is GPIQ, the Goldman Sachs Nasdaq 100 Core Premium Income ETF, another one of my absolute favorites. This ETF yields around 9 or 10%, so it's not necessarily ultra high yield, but there still is a ton of income potential with this one. Now, just like the last two with GPIQ, it more or less pays the same exact amount every single month, which again isn't necessarily the most important thing in the world. world, but if you're trying to build a portfolio that's going to pay your expenses, it can be somewhat important. With JEPQ, we're talking around 40 cents per share per month, more or less, but keep in mind this ETF, which I've talked about in other videos, definitely has a lot more potential for growth. I mean, it says right here in the objective, seeks current income while also maintaining prospects for capital appreciation. Again, one of my favorite ETFs that I currently am building out a position in 2025, and that I'm most definitely going to be utilizing later on in the future to pay for my expenses. GPIX is another one. This is the S&P 500 version. I'm sure you guys have heard me talk about this one also. A little bit lower yield. I think it's around 7 or 8%. So again, you're not getting into those double digit, those 25, 50% yield range, but you are still getting some capital appreciation. So if you're an income focused investor that only wants income potential, maybe names like these aren't perfect for you. But if you're an investor like myself that wants a ton of income, but also wants some prospects for capital appreciation, names like this one is perfect. Now, 2 more good ETFs you should definitely look into, especially if you're an income focused investor that wants to build a portfolio to pay for your expenses, whether it's a mortgage, whether it's your rent, whatever the case might be. DIVO is another super solid one. DIVO offers income potential with the use of investing into single stocks, but along with covered calls, DIVO offers around a 5% starting yield. Now again, a 5% starting yield isn't necessarily the most income you can find across the market, but remember, DIVO has also grown over time and does offer some prospects for capital appreciation. Now, last but not least, this is a little bit more of a risky one. I will say this ETF is in my portfolio, and so far so good, knock on wood, the Defiance S&P 500 Income Target ETF, or SPYT, which yields around 20%. Now, this is much higher of a yield there compared to the other ones inside this video so far, and this is because SPYT aims to achieve a target annual income of 20% inside the S&P 500 using options paid out monthly. In this video, we're not necessarily going to be doing a massive deep dive in any one of these ETFs, but I just wanted to share with you guys some names you could look into on your own. But so far, SPYT has had little to no NAV decay, which is awesome, and it pays out a massive amount of income, around 34 cents per share per month, more or less, and this is based off of an ETF that costs around 20 bucks. So sprinkling names like SPYT or other ultra high yielders, in my opinion, in a portfolio that you're trying to use to pay for things like expenses later on can definitely be helpful to really raise that total monthly and total yearly dividend goal that you might have in mind. Now, out of all 7 of those ETFs that we talked about that all pay consistent monthly income for the most part, I want to hear from you guys down below. Which is your number 1 favorite out of all 7? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.